Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at CQT. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you want to support Ukraine, there are two donation links down below in the description. Without further ado, let's jump straight into the chart. So we haven't done an update on CQT in quite a while, actually. The last update was all the way back here in April. So April 18th, I think, is when we were updating CQT. And as you can see, we were in this falling wedge here, which we did lose the support of the pattern. We did back test the support of the as resistance. And from there, we went all the way down and we capitulated to the 1.618 here at 0.0964 cents. From there, we had a little bounce to the upside. We went into a sideways market for a bit. Then we rejected the 55 EMA, or the 55 EMA rejected us, I should say. And then we had a capitulation all the way down here at the beginning of August, all the way down to the second fib level, which is your capitulation level support, because you usually get to the 1.618 after you lose the first fib level, which is over here. And in case of a capitulation, you should target the second fib. So we had a perfect bounce from the second fib, and I would suggest you set up buy orders, along this area for future, because if you are bullish on the project long term, then I would imagine that I would think this is a very good buying opportunity for you guys, especially if you are buying in this range over here. Dollar cost averaging below 10 cents is a very good idea. So the Fibonacci retracement that I have set up is with this swing high, as you can see, August 15th, and with this swing low that we printed back in July of last year. So August last year, July last year, you get the 1.618, you get the second fib level. Those are your targets. From here, I would imagine this is very near the bottom for CQT. Potentially, we could see another wick all the way down to the second fib level. Of course, unless Bitcoin loses, $17,000, we could absolutely drop even lower to the 2.272 to the 2.414 here, which is even below 3 cents. But until that happens, we can't really predict anything, but just have those levels in mind. I'm going to add those price tags in so you can see the prices. If you want to set up the buy limit orders in advance, feel free to do so. Now, zooming in a little bit over here, you can see that the 20 EMA is a major resistance level. Each time we come up to it, we get rejected back down. Same goes for the 55 EMA, another strong resistance level. Once you break the 20, your immediate resistance above is the 55, so look out for that. And the 1.618 level is a strong resistance that we still haven't back tested yet. So potentially what could happen is we may see a little relief rally here all the way to the 1.618 and then another move to the downside. Potentially that is something that's on the cards, but I wouldn't be swing trading a lot during these volatile times, because we could see a recovery very, very quickly, just like we did in July and just like we did recently in August. So yeah, dollar cost average, that is your best option at the moment. And if we take a look at some long-term targets based on this Fibonacci retracement, you can see that we have 31.5 cents, which is going to be a super important level to break, because this is the low that we printed back in July of last year. And this is the low that we lost over here. We still haven't had the back test of resistance. So potentially when we're going to start recovering all the way up to this level, we could get rejected from there, come back down to the 1.272. This could be a great take profit area, and this could be a great area to buy back in at the 1.272, which is below 19 cents. So feel free to get those targets in. And if you want more long-term targets, if you want to, if we're talking next bull market, what I would do is I would take a Fibonacci retracement. I would pick this low, and let's say this is the low of this bear market. The bear market is still not over, but once we've bottomed, and we start recovering, we're obviously going to know where the low is. But right now we don't know where that is. So let's say this is the low. August 1st, we printed the low. So we'll take that as our swing low for the Fib retracement, and we'll take this swing high in August of last year as our swing high. And you can see your 1.618 target here is at $23. The 1.414 is at $10.65, and the 1.272 is at $6.16. From where we are right now, that would be a very, very great, a very nice trade of 33,400%. Now, I don't know if we're actually going to get to those numbers in the next bull market. I would be a little more conservative, and I would look at the 1.272 here, which is at $6.16.5. From where we are right now, that is a 9,000% trade. That looks more believable. CQT could definitely get to those prices if everything goes right, if we don't get any bearish news from the project, then I don't see a problem with this happening because the market cap isn't that big, and we've been in this super, super long downtrend ever since this peak in August, right? We've been in this downtrend for more than a year now, and at some point we're going to have to start to break the trend and start reversing, right? Because that's just what happens. You can't be going down forever, and you can't be going up forever. Now, I do want to switch over to the weekly chart. Actually, before I switch to the weekly, let's take a look at the daily RSI. As you can see, the white trend lines represent a symmetrical triangle that we are in currently. Actually, I would say this is more of an ascending triangle because you have these two peaks at the same level, but your lows are constantly higher and higher, which means you're creating higher lows and you're creating highs at the same level here. So you're getting tighter and tighter and tighter in this pattern here. And at some point, hopefully you're going to break to the upside. You're going to have a very strong impulsive move and you're going to get overextended. But for that to happen, Bitcoin needs to be bullish. We need to get more bullish news in the market and we need to flip the sentiment. It is very possible that we could see a drop and we could lose this support trend line and we could go into the oversold, which would be a great buying zone in my opinion. And if I can just give you that buy zone. So on the RSI, if we do enter this these levels over here, this would be a major buy zone. So already this is in the oversold zone, but still 24.8 all the way down to 18.8 is a great buying zone because every time you have bounced from that area. So you had one bounce in April, one bounce in May, one bounce in June, and one bounce in August. Also, pay attention to this white support trend line. Once you come down to it, that would be a great entry in my opinion because every time you went down, you had a bounce to the upside, except this little fake out over here. You did go below it, but you did recover pretty quickly as well. So here you did have a bounce in August as well. And if you can come down one more time for that retest, that would be great entry. And the blue trend line here is something that we have retested twice before as resistance. A little fake out here in July, and potentially if we see a nice little relief rally, we could run into the blue trend line here. That would be a nice place to take some profits and wait for a retracement. With that being said, let's jump into the weekly chart and see what's going on over there. Moving over to the weekly chart, the 20 EMA over here is above the price, obviously, which means we are in a downtrend. If you're below the 20 EMA, you're in a downtrend on that time frame. If you're above it, you are in an uptrend. Or if you're in between the 55 and the 20 EMA, you're consolidating basically. And when you're above both of them and you have a bullish cross, that is considered a bull market. So the major resistance level here is obviously the 20 EMA currently sitting at 16.63 cents, so 0.1663, and the 55 EMA above, which is currently sitting below 50 cents. So those are your two major resistance levels to break. You're very overextended from them. So I would imagine a back test of the 20 EMA could be on the horizon in the next couple of weeks for CQT. We did see a rejection here in January of this year, and that was the last time we actually touched the 20 EMA. So it is important we have another back test because you're getting very overextended from the EMA. What I mean by that is you're very far away from it. So the EMA is sort of a magnet and it pulls the price towards it. And every now and then you're going to see a bounce from the EMA, whether it's from below or from above, doesn't matter, but the EMA is sort of a magnet. Now, taking a look at the weekly RSI here, as you can see, we are very oversold well, we're not in the oversold technically, but you can see that the RSI is really doing nothing here. Down below, we're sitting at the index of 32.7. Great buying opportunity. Once you start getting to these areas over here, that would be your take profit zone. But right now over here, this is no time to sell. This is time to buy, in my opinion. So that is pretty much it. If I missed anything important on the charts, let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on Patreon, and let me know what are your long-term price targets for CQT. Thank you all for watching. I'm gonna catch you in the next one. Goodbye and good night.